one thing I do want to point out here is that I've got an 11-page text that comes with this PowerPoint. And in that text, I've got all these citations. So if you want to do some more reading about this stuff, you can see it in there. Let's talk about self-employment tax, okay? Because this is an interesting thing that pops up and people aren't totally familiar with how these rules work because it's not obvious sometimes on the K-1. So when a taxpayer invests into something like a partnership, maybe it's a restaurant or something like that, if the taxpayer is not a limited partner, and that's their functioning role is as a limited partner, simply as an investor, they're not subject to self-employment tax because there's an exception that applies for limited partners, okay? But our client investing in this working interest is going to be a general partner, which means that because the partnership is operating a trade or business, when the income comes out, the income is considered to be a net, it's considered in the calculations for net earnings from self-employment. Now, in the first year, in addition to your intangible drilling cost deduction, you're going to see that there might be some losses in box 1 of the K-1. And so on the K-1, you'll see the losses in box 1, you'll see the intangible drilling costs, and then up in box 14A of the K-1, where you see the net earnings from self-employment calculation, you'll see maybe a negative amount in the first year. But the negative amount you see is only equal to the amount in box 1, and it doesn't include the intangible drilling costs that appear in box 11 or 13 of that K-1. And the thing you have to realize is that the reason that number for intangible drilling costs is not included in the net earnings from self-employment box is because there are limitations the taxpayer may face at the individual level that might prevent them from deducting all of it. But just because it's not up there in box 14A doesn't mean it's not figured into the calculation. So when you get that K-1 in the first year, you need to add the intangible drilling costs that are deducted on the return to the net loss from self-employment. And people miss this all of the time. I've got the citations in your book to show you that that is allowed, but you need to go into the K-1 input and manually adjust that net loss from self-employment to include the intangible drilling costs. So this is a really great strategy. Again, for those taxpayers, maybe I've got a Schedule C and for some reason I can't make an S election. Maybe I'm an investment broker and I've got certain commissions that have to be paid to me personally that have to go on a Schedule C. So I can use these big losses from these oil and gas partnerships to not only offset the income for regular tax purposes, but also to offset a large chunk of my self-employment tax. So this is a phenomenal deal for taxpayers who are in that kind of a situation.